This is Robert Kraft, and I am your host on SNN Network. And with me today for this Wall Street View is Tom Bachrach from PFH Capital. Tom, great to see you, man. How you doing?
I'm doing great, man. Nice seeing you.
Good to see you too, man. It's been a while. I know we met last year at the MicroCap Leadership Summit, where we're actually going to be meeting next week or seeing each other again next week. But had you on the podcast towards the end of last year, and it's good to chat with you again, man.
No, it's nice to chat with you. And yeah, right off the bat, yes, I'll see you next week in Chicago. I guess I got to plug it. It's the MicroCap Leadership Summit in Chicago, and I feel like I got to plug it right now because Ian Castle, retweeted me last week, and I got like 50% more followers. I'm gonna start calling him like the Kingmaker or something on Twitter, man.
Hey, listen, dude, it's the Ian bump, man.
It's the Ian bump, dude. I'm just gonna. I'm tagging them in everything from now on. That's the new marketing plan. So it's gonna, we'll see how it goes. But no, I can't wait. It's gonna be a fun event.
It's gonna be awesome. So to remind my audience, that may have missed our podcast episode, let's get your background. How'd you get your start in microcaps investing, the whole bit?
Yeah. So I have an unorthodox background. I spent a huge chunk of my 20s doing finance accounting for an international construction firm. It was publicly listed. We were based in the Middle East. Things are different out there and interesting. I went out there as a young college grad, and I think that I had actually majored in economics, and I guess that translated as accounting, and they just kind of threw me right in a way no responsible U.S. company ever would have done. So I kind of went over and did that for a while. When we moved back to the U.S., kind of figured, hey, I got all this accounting knowledge. I should put it to work. I'll probably be like a brilliant investor. And then I went through the 4-year learning curve where I realized I was an idiot. And over the years, I've tried to slightly decrease my level of idiocy, and I think I'm half competent now. In terms of getting interested in microcaps, it's, I'm a small guy. If you're Bill Ackman, you're managing billions of dollars, you can't dabble in the space. And he seems like a smart guy, and I don't want to compete with him. So I invest in microcaps. In the background of my firm, real fast, PFH Capital, we're globally focused, value oriented. The key characteristic, like I just said, is we're small. We're going to remain small. We just launched late last year. But it's not, I'm not shooting for the moon in terms of AUM. I want to be able to stay focused on stuff at the bottom end of the market caps. I don't want to have to compete with some of these big fish. They seem quite smart, and I like to avoid them to the extent possible in the market. So,
hey, man, look, sometimes your own success could get away from you. So just be prepared. You never know.
Yeah. We'll see. Yeah.
We'll cross that bridge.
Happening when you see me in the G5 or something. So, yeah.
Good stuff. Well, on that note, when we last chatted, as I said, on the podcast and last year, just around the time that you launched the fund. So, how's everything going with PFH Capital?
Well, it's great. I mean, on a personal basis, I'm doing my dream job. I got like the Buffett skip the work thing going. The thing I've been lucky with is I was really worried when I was launching it that I was going to be like the value guy who launched in like 97, 98 in like the middle of the bubble, and everyone's hollering at them. Like, people are screaming at me, FOMO, crypto, get in the pot stocks. And I thought I was going to be getting killed. I also specifically put in my annual letter, I was like, hey, we're cash heavy. We just launched. I'm not throwing this straight into the market right now. I'm going to allocate it slowly, opportunity set willing, which, obviously I should have just gone triple leverage the S&P 500 to start the year. But it's, let's just say I have great investors right now. They're leaving me alone to do my job. And I hope long-term I can pick stocks half as well as I pick LPs. It's been awesome, man.
Yeah. Well, I was going to say last year when we met, we were, at the bar having a good time. I mean, are we still looking at the airport in, I think you said in Kyrgyzstan?
yeah, that one ran away from me price wise a bit. I think so. I think it's up like 3-4 times. I never accumulated a share. Shout out to my broker Ulan over there. Hey man, I'm still watching it. I'm waiting on, some sort of political disruption there, or I don't know. Someday that thing's coming back to me. But right now I'm watching and just fingers crossed.
Well, the reason I bring it up, I know we're joking, but like in all seriousness, it really speaks to your unorthodox approach to, even what people would say, just being in microcaps is an unorthodox approach, but you're going unorthodox of the unorthodox, like that's really what you're looking at if I'm correct.
Yeah. I mean, honestly, like, I think there's kind of two things going on. I mean, I think one, I'll kind of use like an analogy, right? Like I'll use a fishing analogy, even though I don't even fish. You have like in the U.S. market, right? Let's just say the NASDAQ, New York Stock Exchange. You have like 5,000 listings, $30 trillion market cap, right? So call it a 30 trillion market cap pond and like 5,000 fishies swimming around in it. If you take the rest of the world, I'm going to say rest of the world X, China and Hong Kong, which I think are special cases right now and have some unique political risk. They're also collectively like a 30 trillion, market cap pond. They got 40,000 fish swimming around. So, so on one level, I just look at it and I'm like, okay, well, we get into market caps because we want to be under the radar. We don't want a lot of competition. We want to be places other people aren't competing. Like, I'm not a good fisherman. Like, why on earth would I go to the U.S. market pond and spend a lot of my time fishing there? Like, yeah, I have U.S. investments occasionally, but, I want a low fisherman to fish ratio, because, hey, maybe I'm really talented and I could have done it in the U.S., market, but, hey, if I don't have a 20-year track record. If I suck, I want to be up against the least amount of competition possible. And I think, especially in microcap space, you find that overseas. Now, specific to the current market, the U.S. market, I think, is also just objectively much more highly valued. Probably because there's just a lot more people fishing, a lot fewer fish. But it just is. It's also a little bit more transparent. I think that's a bad thing as an active investor. I want my pond murky. It's so I've been very interested in the international stuff, more so than I would have imagined, probably a year ago, 2 years ago. So yeah, and I'm willing, as you know, to go anywhere. It's all for a price. I mean, look, like, what am I willing to pay in the UK versus Kyrgyzstan? It's probably a little less in Kyrgyzstan, but like, everything's got a price.
Right.
And if you're not loading all your money in one market, you're diversified internationally a bit, and I think that's a good thing. So
let's look internationally. I mean, that seems to be where your focus is right now. So looking at overseas markets, I mean, compared to U.S. markets, I mean, what are you kind of seeing? What's your take on it so far?
So the perfect example, I guess. So I'm gonna try to illustrate the point I just made, right? Because I can look at like top down, like
more fishing or no?
Yeah, Let's talk about fishing.
Okay, all right, good.
No, but like so I mean, I can look at the top down macro, right? And I can say, okay, well, the U.S. markets got a higher, price of sales, Kate, price of book, blah blah blah. Yeah, whatever you want to pick, whatever imperfect measure. Yeah, like we're a bit more expensive than a lot of other places right now. But like that's the top down stuff. Maybe it affects your decision on where you choose to expend your effort fishing. But at the end of the day, I'm a bottom up guy, and so I'm seeing it anecdotally bottom up. I'll talk specifically about the fund disclosure. I'm going to give you the full battery of disclosures I know you need here. Like, the fund is long, live chat, the company I'm about to talk about, and talk to your advisor. I'm an idiot. Never listen to me. Don't ever invest in anything I invest in. Blah blah blah. Do your own due diligence, right? Okay, so are we good? Are we covered?
You're covered.
Perfect. All right, good. Nice. So anyway, like we got a company right now. If you think about it, okay, so you got live chat. They're one of the big three kind of live chat providers. All right. The other big one of them's not publicly listed, Intercom. The other one that's publicly listed, Zendesk. Okay. Live
And
chat.
currently shareholder, not a shareholder in either of those?
Not a shareholder. No, not at all.
Okay.
Not at all. Not short either.
Good.
But it's not a shareholder.
And just to help demonstrate the point I think you're trying to make, where's live chat based? So
live chat's based in Poland.
Okay.
And then Zendesk is based in San Francisco.
Okay.
All right. So like, I just want to compare these two things, right? All right. They're just largely the same company. They do live chat services. You go on the website, you see a little thing pop up in the corner. They'll argue they do all these other things. They have help desk, they can do support tickets, blah, blah, blah. Bottom line, like these companies aren't all that different. They're not like, these magical innovators. Like they're selling, it's kind of commodity product for the most part at this point. If you're a top tier provider, pricing is similar. If one of them adds a cool new feature, the other ones copy it. So there's no, someone's going to argue like, oh, well, this company's so much better. No, not really. And if anything, I think it's a live chat. So let me just kind of tell you where these things are trading right now. So we got the San Francisco company, Zendesk, right? So they've lost about 100 million GAAP the first 6 months of the year. They did about, I think it was 40 million in free cash flow for the first 6 months of the year. So let's just ignore GAAP. Let's ignore GAAP net income because no one cares about GAAP anymore, right? So let's just say that they're a 40 million free cash flow run rate for the year. Mm-hmm. All right. They got negative 300 million in working capital. So like, I'm sure they'll be back in the equity market soon for more shares. They're 3 to 4 times levered, which is, not horrific, I guess, for one of those companies. Live chat, on the other hand, right? And so they're barely profitable business. They generally were losing money most years. I'm going to flip over to live chat. They've been dropping 50% in income margins to the bottom line since 2013. All right. They convert 90% of that to free cash flow year in and year out without almost any variation. Their ROEs are around 100%, a little over. They just recently dropped to a catastrophic 90% return on equity, which is pretty good, I'd say still. They've grown their EPS about 25% a year for the last 7 years. It could have been much higher usually with a company with that high of an ROE, but guess what? Like they have a fat dividend they pay. Now, like, do I wish they weren't paying a dividend and they were reinvesting all that at 100% ROE? Yeah, but that's not how the real world works. You have a certain amount of profitable investments you can reinvest into out there. Mm-hmm. And unlike certain Silicon Valley firms, they seem unwilling to, light capital on fire, chasing on economic growth. Mm-hmm. I view that as a positive. Send me back the money, I'll reinvest it.
Right.
So anyway, they did about 15 million in free cash flow last year. That'll be a little higher this year. So here's what they sell for. Ready? So, Zendesk is not making much more free cash flow than live chat. They're not making any GAAP profit. They have a far worse balance sheet. Okay. By the way, I skipped over that. Live chat has 9 times current ratio, loads of cash, no debt. It's just a good business. It's probably why the insiders own 47% of it, right?
And also, where are they listed?
What was that?
Where's live chat listed?
They're listed in the Warsaw Stock Exchange. They are. And this is what I'm getting to, right? This is kind of the point, ready? So.
Sorry, I got ahead of myself. I knew that was the ball that was going to drop, but I had to.
Oh no, that's definitely the ball that's going to drop. That's like the whole point, right? Oh. So what do you pay for these businesses that are at best equivalent? Although you offer me for the same price, I'll take live chat. I'll be honest with you. So Zendesk, you can buy just about $8.5 billion for their equity. Mm-hmm. Ready? And I'm not even doing enterprise value where the disparity is going to be much worse. Live chat you can get for 200 million. Hmm. So you tell me why Zendesk is worth 40 times live chat. I'll give you my hypothesis, and I think it's accurate. It's because one's in San Francisco and traded on the U.S. market, and one's traded in Poland. And what just drives me insane is it's like, I guess I should maybe I should be discounting it a little bit because of political risk in Poland. And fine, that's a reasonable point. But here's the thing. The fact that they're in Poland is the whole point. They have like a nonstop supply of low cost IT engineers, and like they can basically drop 50% margins because of that. If you're Zendesk, you don't have that supply, which is why you can't profitably compete with them. So like this, people are unwilling to go over to the Poland market, even though there is a straight up competitive advantage from being there. And you find opportunities like this all the time. There's a lot of stuff you have to avoid overseas. You can't blindly go into things because they're cheap, but you got to be looking, I think, in the current market. So
would you say a good start then for those maybe who are listening to this interview and they're like, okay, Tom, buying what you're selling, I want to look overseas. You know, should they look at doing a similar strategy where you see a company that you might kind of like in a sticky business in the US? Hey, let's see overseas. Is there a comparable business or something that's, you know, kind of similar, but maybe just operating more efficiently?
Yeah, so I think that's one of the things that you want to do. Now you want to like make sure that there is a competitive advantage, or at least not a competitive disadvantage to being overseas. That's not going to be true a lot of places. You also, you know, need to have some sort of a view of the country you're investing in, you know, because that's going to affect the margin of safety you want. There are highly risky places where it's like, yeah, maybe at 2 to 3 times earnings, you have my interest, but like I'm not paying 15 times earnings. I don't care how good the business looks. You know, Poland, I think has a good future, and I'm willing to pay 15% for you know, kind of a GARP, kind of 20% a year grower like that. It's, you know, it's there's a million ways to land on these ideas. You can, you know, I have kind of my preferred screening things. I have, you know, a whole variety of investors I'm interacting with who we share ideas with, and they're all over the world. So they'll pop things up from their locality sometimes, which is really helpful because I like having people on the ground to talk to. But it's, yeah, I mean, I just think people need to start looking more overseas. I don't think results are going to be good if you don't do that this next decade. I think the U.S. market is priced for some difficult returns. And so, you know, I think there's kind of not much option, you know, and, you know, so.
Gotcha. So
yeah.
not to take a quick transition here. It's what we call a hard turn in the biz.
Yeah, take it.
Yeah. All right. So, so, you know, one of the reasons I wanted to touch base with you again is because I saw that you just published this kind of a for people interested in investing kind of article that you post on your website about, you know, where to begin. And one of the reasons I started my podcast was this same thesis. You know, I got asked from my fraternity brothers all the time, Microcaps, I don't even know what a stock is. You know, I'm like, all right, I'm going to create something to help take you on the journey with me. So, you know, that's what I loved about this. And for you, I mean, did you have a similar motivation?
Yeah, no, I mean, for me, it was purely a marketing exercise. I was like, I'm just going to drop Ian Castle's name in this, convince him to retweet it. And I was like, boom, to get some followers. So, no, I mean, that part was a pleasant surprise. I mean, basically, I mean, it's as simple as this. Like, it's the same thing. I think anyone who invests, it's like you kind of like, you talk to like, you know, you talk to people and they come up to you, and sometimes they're looking for hot stock tips, or, you know, they think that like investing, you're like inside the matrix all day, like moving around like stocks and day trading, and, you know, and like, I don't know, investing's not gonna be a fit for a lot of those people, but there are a lot of people who come in, you don't know who it's gonna be a good fit for, and I've never been satisfied with my advice I give them. It's a tricky thing to do because it's such an entrepreneurial undertaking, and it's a personal one. There's no true path. There's no one who's going to spell out carefully everything you need to do and how to do it. That's just not how it works. But I thought there was a place, you know, I thought there was room to kind of try to create like a starting point that people could launch their journey from, because it's daunting when you try something new, whether it's investing or anything. And I think that it helps to kind of say, hey, like, you know, if I had it all over again to do, and to do more efficiently than I did, you know, here's some spots I'd start. My pure motivation, I guess, on the sappy kind of corny front would be, I feel like I'm a fortunate person on so many levels. I've specific to investing, I feel incredibly lucky. I had just a multitude of mentors. They were pretty much all virtual people, many of whom I've never met face to face. They didn't have to take time out of their schedule to help me. There was no hope of monetary gain. And they just did it. And I can't repay those people, but I can pay it forward. Mm-hmm. And so and also I like being a mentor. I don't know if my advice is worth anything, but I'm going to give it, and I like doing it. And if it is, that's great. And if not, sorry.
Listen, you mentored me. I never would have looked up an airport in Kyrgyzstan if without your advice. And I'm fortunate that I didn't put any money in it. So I thank you for that advice.
No, absolutely. You're really going to thank me when we have travel bans on us and we're broke in 10 years. It's going to be good.
Yeah, unfortunately, the NSA gets wind of this. Oh, wow, look at these U.S. investors just looking at airport in Kyrgyzstan. Why?
You better believe they're recording this conversation right now. And actually, they're probably, which is silly because it's hey guys, this is gonna be on YouTube. You can just sign right in. It'll be there. Although, assuming he doesn't edit it out. But it's.
Well, I mean, look, we're recording this on Thursday before the Monday I'm going to publish it. So I guess they're going to get this before. But anyways, we digress. Quick sidetrack. So what would you say are the main takeaways from this article that you want people to really, engage with when they do open it up?
Yeah. So, like I said, so again, just to reiterate, this isn't I don't know it all. I always look back on where I was 2-3 years ago. I think I was an idiot. It's probably going to happen again in a couple of years. This isn't a 100-page, 200-page, 500-page book telling you exactly everything to do. This is hey, here's some areas I think would be a good place to start, assuming you're a total beginner. You might already have some of the knowledge and you might not need to cover it. I essentially break it into kind of 3 general sections. The first one's tools, which is basically, learn some accounting. Understand what a debit and credit are, some basic stuff. Know how to use Excel. It's pretty darn important. And if you can't model on Excel or a spreadsheet, maybe some people don't find those subjects interesting. I do, but it's I think those are kind of the basic tools you need to even go down this path. So I kind of list them right off the bat. That's not the sexy stuff, but it's. You need it.
Look, as someone who just got his MBA and did a lot of Excel spreadsheet work and regression models and all that,
yep.
I will be the first one to say it really helps. Really
helps.
Not necessary, but it does help.
Yeah, exactly. And then so the second section is, I think, the more interesting stuff. It's really I call it philosophy, or no, I think I call it theory. I think, and essentially that's just throwing a whole bunch of Buffett and Munger indoctrination at people and trying to get them to join the cult, basically, and buy into value investing and the mental lattice work, decision-making process stuff, and thinking about your competitive advantage. It's kind of the theory underpinning it. And then the third section is, go ahead.
I was going to say I think for our generation, the best, other than just obviously, look, if you're inspired to just pick up the book and Intelligent Investor and Warren Buffett's letters, shareholders, that's great. But I think one of the best things that I've watched in the last couple years that I think a lot of new investors that want to understand it and especially understand Buffett is there's a great documentary on HBO. I think it's called Becoming Warren Buffett. It's incredible. And that'll if that doesn't inspire you, then definitely look at something else.
So this is another key element of the page. This thing is dynamic because, like I said, this is what I kind of think some good advice is today. Mm-hmm. I'm gonna look back in 5 years and I'm gonna think, there's some pretty shitty advice in there. I should fix that. There's gonna be some stuff I want to change. So this is the dynamic page. So when people like you come and are like, hey, you should check out this video. Like, guess what? You might see some things get cut out, and all of a sudden there's a video inserted in there. So I think the general themes are going to stay the same, but I'm going to be constantly trying to inject new content into it. So the third and last section is practice. Mm-hmm. That's the most important one. You can't just read investment books all day, and do Warren Buffett kumbaya, and that's not, that stuff's so essential, but it's not taking you to the promised land. Like, you got to practice. You got to put in like your 10,000 hours. So I kind of suggest, some places that I think would be good to start, some blogs I think are interesting to follow. I'm going to keep adding more there. And that's, I think the real takeaway from that section is probably the most important takeaway from the whole page is, if you're interested in trying investing, do it. Like, just try it. Like, don't think about it. Just dive in and do it. If you don't like it, quit. Find something you're passionate about. Like, life is short. Like, it's not worth wasting time on things that you're not passionate about, but you won't know till you try. Mm-hmm. If you are passionate about it, we got this. Our generation's incredibly lucky. We got this huge online community of basically free mentors and peers to collaborate with. And what I'd advise people to do is dive into that, participate, email with people, comment with people. Like, you can't be worried about making mistakes and looking stupid. Yeah. You got to get over that. That those are all tools that you're using to improve your decision-making process. And if there's one true takeaway, I think it's that last thing, which is you're going to have up and downs. Like, just engage, stop worrying about looking stupid. You're not going to care about that on your deathbed. Just go do it, And so I think that's probably the single biggest takeaway in the end of this thing.
Cool.
So
that's awesome. Well, and again, I can't recommend more. Go check this out on PFH Capital's website, Tom's website. So rounding out here, my one last question. Well, I have two more questions, but this main last one is, what are your thoughts then for microcaps for the rest of 2019? What are you seeing?
All right, so like, you talking kind of general market or specific stuff, or either?
Let's say general for microcap, if that makes sense.
All right. So, like, general. Actually, I'll give you both, because I feel like my answer is gonna be sucky and boring on the first one. So I say on general market. I got no idea what's gonna happen. I have the foggiest clue. Predicting's like super tough. I'm just kind of guy. I'm looking for decent opportunities at a reasonable price. And I'm trying to find ones that have enough margin of safety that I don't need to be a superstar to do well or okay out there. So, I mean, I don't have a lot of general market thoughts. In terms of some specific microcaps that are kind of interesting right now, actually, no, here, I'll give you one here. If you're looking for a good microcap bag holder opportunity, I think Westaim is a wonderful one. It's Canadian listed. There's Cubico on Twitter. He has like a whole support group for us bag holders. We meet on Tuesdays. We basically we cling to whatever morsel of positive data we can pull out of context and reinforce our opinions on the investment. It's really fantastic. But so I highly recommend you join us as a bag holder there. But yeah, okay, sorry, I got to disclose that. Wait, the fun's all on that. And again, don't follow my advice. But it's but no, I mean, you're talking like general market. I just I've stopped trying to predict. You just don't know what's going to happen. Like I'm trying to get into things which I feel highly confident. The market shuts down for 5-10 years, owning, and that they'd be in a much better place. But I've learned the hard way that things can do pretty much nothing for 1 to 2 years at a time. So and so it's. Just gonna kind of ride that out. Just keep
trying to, for lack of a better term, bottom feed and find the cheap stuff.
Yep, I'm a bottom feeder. My biggest advice is to see what I'm buying and wait like at least 1 to 2 years before you buy it. That seems to be like the optimal market timing strategy so far. So
just find it, wait a couple years, and then buy it.
Yeah, exactly. And in between, like triple levers along the S&P 500, and that seems to be the right strategy nowadays. So.
Well, Tom, it's always a pleasure you coming on here. Where can my audience go and find more information about you, on social media and also PFH Capital?
Yeah, so the website's pfhcap.com. It's P as in Paul, F as in Frank, H as in Henry. It stands for Pennies from Heaven, the old Frank Sinatra song. pfhcap.com. If you want to look at the webpage we were talking about, it's pfhcap.com. Was it forward or backslash, whichever one of those is correct on the internet. Learn, LEARN. And then you can also find me on Twitter at PFH Capital. So come check me out.
Tom, it was a pleasure, man. Thank you for joining me today, and I'll see you next week.
Yeah, always a pleasure.
See you, bud.